It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Tuesday evening, September 27th, 2016. Squeezing out the last few drops of what has been a very, very good month of September. But we have some great trading opportunities setting up for tomorrow, but we got some major news on the calendar. So our plan is to work around the news and follow a very specific plan for tomorrow. Crude oil and the S&P are both trading at the highs of their trading ranges this evening. Gold is trying to finish off a measured move. They missed by only a few ticks earlier today, and the euro is testing overhead resistance as sellers try to send this price packing back down to the lows of a possible megaphone pattern tomorrow. We got a bunch of news, a great strategy. No matter what happens, though, we've got a plan for tomorrow. I want to remind you, though, the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of the YouTube video. Follow that link in the description of the YouTube video. Follow that link over here to the blog at Sideways Markets and come watch the full-length version. While you're here watching the full-length version, don't forget a couple things here. Join the mailing list. I'll send you an email every evening when our nightly newsletter is ready to go live. Download the charts you see in tonight's video. You can download those charts right below the video tonight. Over on the right-hand side, don't forget to grab your free pass. If you're not a member here at School of Trade and you'd like to come out and see what all the commotion's about, grab that free pass and join me in the trade room this week as a guest. And of course, don't forget you can learn more about what it means to be a member, right? You can learn all about our frequently asked questions on the right-hand side of the website. And shoot me a message here. I'm always standing by 24/7, 365 to answer all your questions. Use the last word button on the right-hand side of the blog. Hope you guys had a great time last night watching that debate. It seemed like today was a lot of reaction to it, but I think we've got things calming down here. And of course, we're going into a Wednesday session. Now, we got no major news out of the Asian session here tonight. Nothing new coming out from our friends in Asia tonight. Really nothing big tomorrow until we get into the U.S. session. Tomorrow morning we got 8:30. We got Yellen at 10 o'clock, and of course we got the petroleum status report tomorrow morning at 10:30 a.m. The very first thing I see on this calendar, obviously, is we got Yellen tomorrow. And typically when Janet Yellen is doing her thing tomorrow, we're going to see a smaller window of opportunity. Typically when you see days like this, it's going to be an early in, early out, get out before she hits the microphone tomorrow. And then we're going to have to play it by ear. You know, sometimes this goes very, very slow when we get into that 10 o'clock hour and we can't really get anything out of it until the afternoon. Sometimes the very good session. So we know we have Yellen on the microphone tomorrow at 10 a.m. This is her semi-annual testimony in front of the House Finance Committee. It is a big deal. We do expect a lot of people to be listening in. We just heard from her regarding the FOMC last week, and so we're hearing from her again tomorrow. Again, 10 a.m. tomorrow. It's a horrible time for us as traders because it's right in the meat and potatoes of the morning session. So we are going to have to play it by ear. I do expect there to be some lower volume. The rule of thumb tomorrow is going to be get in early, right? Don't try to force things while things really slow down. And then we're going to see what happens. You know, if it slows way down, we'll be watching like everybody else, and then we'll try to catch it on the rebound as we go into lunch and the afternoon session. Usually what will happen is by the time she gets speaking tomorrow, things will slow down a little bit, and then they'll start to pick back up. A lot of times we get some good lunchtime and afternoon trades just because people aren't able to do any business right around that 10 o'clock hour. So get to it early tomorrow, right? Get the money out of the market in the London and the early part of the U.S. session. Watch closely at 10 o'clock. Other than that, though, we're pretty much at the mercy of what happens tomorrow regarding that 10 o'clock Yellen testimony. We've got durable goods at 8:30. Right, thank goodness for that. That should get things moving for us here tomorrow in the U.S. session. And, normally I talk about the petroleum status report on Wednesdays, but it's likely going to be a non-factor tomorrow. I would imagine we get a little bit of juice from the inventory report. But again, we're going to have to wait and see what happens when Yellen starts speaking as things slow down. I definitely never recommend that we actually trade the inventory report. So if we do see some volume afterwards, it'll be about 10:40, 10:45 once that news comes out. So get to it early. Don't force things over Yellen's testimony tomorrow morning. And then again, watch the backside of the morning tomorrow, 10:45, 11 o'clock, after Yellen's got her stuff out of the way. And of course, after we get the inventory report out of the way, don't forget, we'll be doing all this, of course, with our students in our trade room tomorrow morning. Now, speaking of the plan for tomorrow, let's jump right in. Crude, S&P, gold, and euro. Now you know the schedule for tomorrow. Again, we're kind of moving around Yellen tomorrow morning, trade around her. What are we doing with crude oil here? Crude is trading at the highs of the trading range this evening. And with a bear bias, we know the sellers will be looking for opportunities to sell off the highs with a target back down to the lows tomorrow. The buyers, on the other hand, will be looking for either opportunities to buy the low of the range or buy a pullback after a strong breakout above the range highs that can ultimately hold above the battle zone. You know, the first thing I see when I look at this is, you know, we talked about this in last night's newsletter, the power of a wedge, right? You can easily see, we talked about the wedge last night as well, right? Very strong wedge. We saw that today in the trade room, right? We used it as an ultimate target in our trade room today. It was a very, very good day with all of our students here. Of course, nothing but bearishness. Well, that bearishness then results in a trading range. Double tops, double bottoms, moving average going sideways. And so we know that this has a bearish bias to this trading range. And that basically tells me that sellers are going to be looking to sell the highs. Buyers are going to be looking to buy the lows. We're going to focus on failures. Buyer failures to sell the highs, seller failures to buy the lows. And there's definitely going to be an emphasis, a more reliability on selling off the high, right? That, of course, is going to be the objective here for tomorrow. So if I'm a seller right now, I'm looking for selling opportunities coming off the high using buyer failures to sell it back down. And, you know, one way of looking at it would be as the moving average comes up, as that moving average comes up, buyers try to buy the pullback, they fail, and then, of course, the sellers can grab it on the way back down. Two opportunities here to sell the highs. Both of them, because of the overall bearishness of the market, are relatively similar in reliability. The breakout pullback, right, the secondary opportunity, right, after we break down, then hold the pullback to the moving average, that will always be a little bit higher reliability just because, of course, we've already turned into a bear market at that point in the very short term. So sellers looking to sell off that high. Another opportunity here for the bears tomorrow would be, let's just say, for example, that we do end up back at that low. Strong breakout pullback. We're going to really have to get that breakout pullback to hold below this 44.17, which is the triple measured move, right? Which, of course, they have not been able to accomplish yet. So if the sellers are going to try to sell low, it needs to be a very strong move lower. And really, when I say strong, I mean get that moving average below the range and hold it below the 44.17 tomorrow. So if you're a seller on crude, you're looking to sell off the highs with failures or pullbacks, right, with a target back down to the low. And then, of course, trying to hold a breakout pullback below that very obvious area of support at 44.17. Clearly, the easier job for the bears is going to be selling off the high. Clearly, the more difficult for the bears is going to be selling into that low. I'm a lot more cautious of selling that low. It's going to have to be a very, very strong breakdown. And then again, hold that pullback below that 44.17. What if I'm a buyer right now? Well, with the range, the biggest thing right now is that this has a bearish bias to it. So if I'm going to be a buyer right now, in all reality, I want to see something like this. I want to see it break out, hold that pullback, and really hold it above this trend line. Now, this trend line, you can see I'm kind of connecting those highs, right? Bringing it, my drawing tool here. It's so shallow, I can't lock it in here very well, right? But you get the point, though, right? There's going to be a trend line overhead, trend line that comes down at the bottom, and you could look at it as a bear flag, right, if you really wanted to. It's all pretty much the same stuff. So if I'm going to be a buyer right now, I want to see a strong break, right? Hold that pullback, and then go, and I've got targets waiting for me at 45.48, 45.59, and of course the high of day basically at $46 a barrel. What I don't want to do if I'm a buyer right now is get wrapped into trying to buy a breakout pullback. That's not going to work very well, and that's exactly what the sellers are going to be hoping for, right, for a buyer failure. What if you're going to be a buyer at the low? Now remember, at the low of this range, right, it's a bear bias, so it's a little bit lower reliability, but as soon as we go back down to low of that range, the buyers want to see the sellers get caught trying to sell into that low and then buy it back up. What you really want to do is you want to be buying above the low of that range and the 44.17. So for example, if we go back down, right, just like I talked about how the buyers don't want to do this, right, and buy into that trend line, that's exactly what the sellers aren't going to want to do. So we go lower. The sellers don't want to sell into the low of that range, right? So assume they do, failure, that'll be your chance there for the buyers to take this back up to those highs. What you want to be careful about, though, is if it runs lower, seller failure here, and now you're buying into what is likely going to be a buzzsaw there, right, and get really chopped up around that 44.17, right, to 44.29, the low of that range. All right, again, what I really want to see is us try to go lower, get back in, and give me a chance here to buy above that 29, right? It's either that or I have to really wait patiently for a big move down. Sellers can't hold, right, and then try to buy it on the way back up, so I'm not buying, right, so I'm not buying into that resistance. The bottom line is there's going to be a lot of sellers trying to sell that breakout pullback, and I don't want to mess with them. What I want to do is I want to look to buy it, but buy it without having to buy into all of this resistance here, right, so it's a nice clean shot going back into that range. Difficult right now if this price goes higher. If it goes higher right now, make sure those, right, if you're going to be a bull, make sure you get that strong breakout pullback to the downside. And if we do run to the downside here, right, tomorrow, that 43.64, that'll be the long-term target for the sellers, right? The high of day, of course, at 45.97, the long-term target for these buyers. Don't forget this range, buy low, sell high. There's a bear bias to it. And of course, with that bear bias, we want to be trying to sell off the high until the buyers can take control. E-mini S&P is bullish and trading at the highs of today's range, which tells the sellers to be looking for buyer failure to sell off the high with a target back down to the lows. The buyers, on the other hand, have a bull wedge to work with, but they need to get a strong breakout pullback that can hold the pullback above that measured move if they want to be able to make the move up to the wedge target at that 21.66 tomorrow. As you can see here, and what was amazing is this was, of course, the battle zone from last night's newsletter. The battle zone was pretty much like this, right, from last night's newsletter. So if you missed the test of the battle zone last night, you got it again right at the tail end of the U.S. morning session this morning. A very good example of how we are always using last night's newsletter, right, to look for reliable trading opportunities in the following day. Just a beautiful example. And of course, as I talked about last night, we had some major support down here, and so you were ready to take your profit there. Again, if you follow the plan from last night's newsletter. Now, of course, this becomes just a big trading range, and if you're wondering, right, if you're wondering how often do these ranges look this big, they're not usually this large. They're not usually this large, right? We saw a range on Crude, it was half the size. So this is definitely uncharacteristic, and with this uncharacteristic range, we know that we may get a move, we may get something big tomorrow, right? The size of the range tells me you could look at this as a multi-directional, right, trading environment, which means you're going to have plenty of buying opportunities on the way up, plenty of selling opportunities on the way down, plenty of buying opportunities on the way up, and of course, plenty of selling opportunities on the way down. So think about the size of this range. And it's a range, but in all reality, you can think about it as a multi-directional trending environment, right? It's kind of the way we nickname it in our trade room. It's a range, but it's such a big range that as this price goes back lower, if it goes back lower here, right, the sellers are going to have so much time to be selling, right? Then back at the lows, the buyers have so much opportunity here to be a buyer. Unlike your typical range where it's narrow and all you can really do is buy low and sell high. Think of it this way. The most reliable trades tomorrow are going to come outside of this, right, of kind of this box I have in the middle of this trading range. So sell the highs, buy the lows, and try to get in the lower third or upper third of this trading range. That will always be where you get the most powerful trade.